Hello, everybody, and welcome to another episode of Down But Not Out, the show where founders tell their real life stories of entrepreneurial resiliency. I started this show after my one company, VisitorQ, was dealt a death blow by Google that led to us almost losing all of our clients and all of our revenue. And that would have happened if it wasn't for the hard work, determination, and resiliency of our team. I love a good underdog, so these stories resonate more with me than the story of the $1 billion exit or the story about how your company IPO'd. These are stories of grit, meant to inspire you, the listener, to keep fighting. As entrepreneurs and business owners, we will have our backs against the wall multiple times. So let hearing these stories be your fight song, your hoorah, that thing that gets you out of bed on those tough days. This episode is brought to you by my company, VisitorQ. Identify the anonymous companies visiting your website so your sales team can follow up with them. Start your 14-day free trial at visitorq.com. Now, let's dive into this episode. Today, I'm joined by Eric Vardon. Eric has over 20 years of experience as an entrepreneur, having founded and exited several companies throughout his career. Eric is also an advisor and investor to a few different industry-leading technology companies. Eric's most recent venture, Morpheo, is a first-of-its-kind AI-powered digital marketing analytics software that monitors your marketing efforts for you and alerts you of any anomalies. Eric, thanks for being on the show. Are you ready to share your Down But Not Out story?
Absolutely, Nick. Ready to go.
Awesome. So I don't know if my intro sufficed, but let's have you give an intro for yourself as well.
Yeah, it's completely fine. Long time entrepreneur, always been specifically in the marketing side of technology, I guess. And it's kind of what got me started, and I'm still in it to this day. So most of the things that I'm interested in both personally and in investing and spending my time and whether it's in business or advising or directly involved, it generally is in that area. It's what gets me excited, and happy to chat about it.
Awesome. So I know going into this, the story that is mostly around Arcane, but you've had a long journey leading up to Arcane and throughout your career. So can you tell a bit more about kind of the businesses and your story leading up to Arcane?
Yeah, so I mean, again, always been around the marketing side, and so I've been in agency most of my career. Started out on the production side and building websites and all sorts of great things in the early 2000s when not many people were doing it, and you could charge a lot of money for it. That's right. Yeah, well, you could charge a lot of money for it, and we were really young and had great opportunity and fantastic clients and. Flying all over the place and meeting great people and really just had to learn how to build a business. I had no career training in running a business, or did I know necessarily, what an entrepreneur was, but you just figured it out along the way, from accounting to sales to account management and, managing expectations and staff and all those kinds of things. You just sort of figure it out. And so, fast forward, started another agency called Arcane in 2011 and grew it quite rapidly. And it was just a great, timing was on our side. It came out of the last downturn, and accountability for marketing and investment in clients' budgets kind of came back, but a lot of questions that they were asking were very different in terms of not just giving us decent budgets and timeframes, but what are you going to do with this budget and what is the expected return? And we had answers and ideas of how to really change the business model, and that's kind of how we grew. We promised a rate of return for digital marketing investment. We were able to show that in the data, and it became, quite easy for us to move traditional media dollars over into digital marketing dollars. A lot of pay-per-click and search engine optimization and custom website development for, speed and optimization and lead generation and online sales and all those great things. And we were able to, combine new business with the growth of existing clients with a few, key clients that helped us grow. And we, moved from, 0 to 15 million in revenue in a few years. We moved 3 offices. We bought a couple small agencies to help us manage, gaps in our resources, as well as gaps in our ability on certain talents and branding and, heavy development and those kinds of things. And had a whole bunch that actually didn't go through from an acquisition perspective. So we were just, John and I and Brian and Tony, sort of the 4 partners, just, focused on as much growth as possible. And then figured out that we had to look inside and talk a little bit about that thing called profit and, process and departments and business units. And, so that was that was really a unique challenge of building a business, but then actually having to, have that wave catch up to you, which, is part of what we're going to talk about. So with rapid growth and hiring, 100 people in a few years, and then 4 offices across Canada and clients everywhere and different needs, it became, pretty crazy, and a lot of things we did right, but a lot of things we did wrong, of course.
Yeah, and to kind of take a step back, revenue kind of guaranteeing a return on investment. Were you taking a commission or just the traditional agency approach of X amount per hour?
Yeah, it was more about a value-based approach. So we would, quote on, estimated hours, if you will, but we really tried to add a premium for many of the founders and the leadership that were involved, very senior, would be heavily engaged in the client's business to ensure that maximum return, would be seen, especially in the early parts of the relationships of new business. And because we love it, and we love business, we love marketing, and I think that helped us have great conversations. And from that, it just sort of spawned on and on and on, and kind of grew from there. In the metrics we promised and all the things that we came with, it definitely was on the service side, but we had a few arrangements on a performance-based model, but it was really difficult, to extract the data enough, or for us to take enough risk early on where we, were able to build that. And I think as the business grew, looking at hours, looking at profitability, and how to manage resources and plan for resources and deal with teams and, pay bands and all those things, means you need to cash flow and manage the business more succinctly and more specifically in a traditional sense. And so we kind of, moved towards that as how we built, and stopped doing a lot of the pay for performance side.
Awesome. And then kind of taking a step forward, over the 0 to $15 million in revenue and few hundred employees, where were the big leaps? Obviously getting started takes the longest, and then gaining that traction. And then there's usually big leaps in there, from going to doubling one year, doubling. What were those big leaps that you remember?
Yeah, I mean, the biggest one that comes to mind, I mean, we had a couple key major clients that at the time represented a little over 50% of our revenue, which you never want.
And how many key that made up 50%, roughly?
Pardon me? How many?
Like, are we talking 15 key?
Or no. I mean,
three?
A handful, really, 2 or 3, and one major that represented the bulk of that. Like I said, what you don't want, but service-based business needing, capital from a traditional bank, or, raising capital, or those types of things. You don't really need it, but at our scale, we were at the point where we probably should have. And so we made that sort of conscious decision to be able to keep the revenue from a small handful of clients, more than it should be, so that we could actually build the business and not have to have, external noise from, financiers and all those kinds of things. So that was part of our strategy, and I think it worked fairly well for what we needed.
Yeah. And then back to the big leaps one, what years were these leading up? Was there a big trajectory kind of in the past few years? Was there, or was that early on? When did you land, I guess, the big major client? Was that a building block client from the beginning?
Yeah. So like I said, the example of the landing of that was my first one, but to expand on it, we needed people, and we needed a lot of them. And I remember one day, three examples. One being one day we always had Monday morning kickoffs, and we would have all the offices join on Zoom, etc. We had 11 people start on one Monday morning, which was pretty insane to have that many people start on one day, and the whole
Yeah.
onboarding needs from it. But prior to that, we had moved from a small office to a medium-sized office of 3,000 square feet to about 12,000 square feet, and we're like, okay, this is going to be enough. After about 8 months, it wasn't, and we looked at a building here in London, as you know, which was dilapidated, and one of our good friends and clients at York Developments was planning this sort of WeWork space thing, if you will, and we looked at it and we're like, this is amazing. And at the time, there really wasn't too much going on from a tech perspective. I mean, there was, but not as much downtown. It was a little bit shared around different parts of the city itself. And this was going to be of their plans was an anchor for the tech movement downtown, and to build that density in the core. So we looked at the plans, and we looked at where we were going with our business, and we just decided not to take one floor or two floors, but to take all three, and almost 40,000 square feet, and to go through an entire renovation with them while building the business. Why wouldn't you do that, right? So that was a massive leap, where we already had whatever amount of years left on the other lease and had to rent that out, which we did, and got lucky on that. But that was a huge one. So that's number two, and then lastly, number three. We worked on the expansion of the West for our business, and trying to manage clients in Calgary and in Vancouver and British Columbia, etc. And we had no idea of what the West was like. So why not go and try to acquire an agency at West? And long story short, we did in Calgary about 3 or 4 months before oil dropped, from $100 a barrel to a lot less, and couldn't have had worse timing. And it worked out in the end, but those were three major leaps that, again, all worked out. But at the time, you're like, what are we doing and why are we doing this? But you trust your instincts, and it worked out. But those are the three that come to mind right off the top.
Yeah. So over 2011 to 2019, I think, is kind of where we are at this point. And then you have Arcane. It's grown to 15 million in revenue, give or take, a few hundred employees, multiple offices. You're Canada-wide, it sounds like. Do you, any clients in the US, Canada-wide?
Both for sure. Yep.
North America. Okay. And then, as you've kind of alluded to, your down but not out story starts to happen. Walk us through that.
Yeah, I mean, it was I think it was 2000. I'm gonna say 18.
2018. Okay.
The early part of 2018, and we had gone through points of consolidation where understanding the profitability we needed in the business, and do we need all these offices, and is it the right group of leadership and all that great things. And so we went through from a founder's perspective, knowing that John and I, more specifically, and John at the time had sort of moved on already to Event Connect, and was the CTO of that business, and I was the CEO of Arcane, and working heavily with Brian at the time, and Tony, of course, as well. And so we had decided earlier on in 2017 that we would move away as from the founder's perspective, and also managers, and I was the president and the CEO, and also account management, and doing a bunch of things, wearing too many hats, as you all do when you're building a business, that we would step aside, and Lindsay Schneider took over the role of CEO, and Dave Bunce took over the role of COO. And so we had transitioned them after about a year of planning in March of 2018 to lead the organization, and that was for the most part, overwhelmingly positive. Took some transition and time and all those types of things.
Yeah.
But during that, a few months after that, there was a sort of a shitstorm, if you will, of a bunch of different things. And we had a couple clients, based on our growth of that wave that came, behind us, catches up to you at some point, and some clients that weren't happy with work that we had done. We had some clients that had either been acquired or went under, and there was some billings and revenue that that didn't come through. There was an election locally, and so that slowed down our new business. And at the same time, then we lost one major client that put a huge sort of stranglehold on us, and a bunch of other things sort of, but it seemed to all happen at the same time. And I was expecting my second child at the time, and my wife was, fairly pregnant, and we're going through losing a lot of money and a huge amount of stress. And there was other lawsuits going on, and, all sorts of, again, craziness. And my brakes went in my car, my basement flooded, and like there was all of these things that just,
you were being punished for something.
Surprisingly, CRA needed us to pay something we didn't pay, or whatever the examples were. I kind of forget. There's a list somewhere that I've got, but it was just like you need to pay attention to the business. And so we went through a lot as owners and a management group we all came together, but it was we were in the day-to-day, hour by hour, in terms of sales targets and profitability and meeting our our goals for the bank, of course, managing payroll and all these great things. And so we had to do a lot that, after 8 almost years of running the business, forced us to really look inside and ensure we knew where this business needed to go. At the end of it, World or Energy, whatever, was saying you need to look at things, and we did. And I think we kind of got through it after it was, really a year and 12 months of just literally hour to hour, focusing on all things finances and making sure everybody was accountable to the things that we, that we needed to do. We split the business in terms of offense and defense, and me and Brian and a few others, Matt, were on offense, and we didn't really worry about profitability. We didn't worry about the projects getting out the door. We really started to focus on the things that we needed to do to move the needle, and subsequently the defense team did the same. And that's kind of how we ran the business, and to this day have that mentality of making sure your swim lanes and aren't just wasting time and doing meetings for no reason. So, we learned a lot, and personally going through that, when I couldn't, the worst of it was June, July. Our baby was due at the end of July. I couldn't tell my wife any of this that was going on because I couldn't stress her out. So it was like 6 or 8 weeks after, the baby was born, like, just so you know, this is kind of what's going on and what we went through. And it was, to say the least, the most unbelievable, scary place I've ever been, and needed a few months after we got out of the weeds and were sort of free and clear to step back and remind myself what we went through. But it was quite emotional, quite stressful, and at the end of it, needed though in the business after that, which we'll get into, was really never the same since, in a positive way.
Yeah. So a lot to unpack there. Do you think, in hindsight, looking back, that the founder stepping away, things would have went different if any one of you was at the helm still?
No, not a chance. And I think what was great is because that actually forced the ability for us to separate the team and focus on areas that otherwise, if we hadn't worked for a year on splitting up those roles and responsibilities, it wouldn't have worked. It had nothing to do with them. The timing itself, nobody knew. It was just a culmination of again, shit happening at the same time. So it's nothing that they could have done. But for them as leaders to be able to, we had it pretty good for a long time. So for them to go through that adversity as leaders, I know to this day is probably a fundamental turning point in who they are as coaches and mentors and leaders within the business. And I, of course, wouldn't want it any other way. You can't change the past anyway, so I have to say that. But no, I think for them, and you'll have to ask them if you see them next time, but I think for them it was something that they'll probably never forget.
Yeah, that's a common theme across these interviews so far, is that time is really one that imprints into your brain, and it's hard to forget kind of how your knees felt, how your stomach felt for that full year, and yeah. But you mentioned it's kind of a snowball of different things, but kind of summarize for everybody, if you were to put it down to a few things in one sentence, kind of what were those major issues that occurred that caused this to happen in early 2018? Sounds like the loss of a client or two.
Yep.
And just internal processes, or take it away.
Yeah, I mean, it was a lot of things that many weren't under our control, but the one thing that to your point, we probably didn't have enough eyes on is just maybe we hoped everything would be as it was because it just figured itself out in years past. And maybe we had the same, evoked response or subconscious sort of taking it over where, now you look at it and if any metric is off in a day, you start to flag it and something's up. And that was probably a few months where we're like, oh, it'll be fine. And, it'll work itself out. And, that's a weird coincidence. And, this happens. And so that's weird. That's too bad that that's happening. And I think we probably didn't really trust our instincts maybe as much. So of all of the things that we couldn't control, that was a big one. And maybe on top of that, we took our eyes off the internal part of the business. And I think ego many times when you're growing and you're younger, you're growing a business and, you think employee count is an important deal and you think top line revenue is an important deal. And you don't realize how, if you look at it that way, actually impacts happiness of team members, leadership that they don't have, time with individuals. You get caught up in ego. And I think to me, that's a big outcome of probably, things and decisions in months or years past that eventually caught up to us. And I think, again, not in our control, but those are a few examples for me of things we should probably have caught.
Yeah. Yeah. That is an overly realized metric that people go for, employees, right? And they push for it, but they don't realize that in doing so, and kind of the things that you realize later on is the more employees you have, a lot of the more issues you have to solve, the bigger your team, the more culture you have to put in, the more HR practices you have to put in place. The bigger the team doesn't necessarily mean success or happiness of that team, right? It's something that you need to, and onboarding 11 people in one day is tough. And you have to properly onboard those 11 people. And as you kind of get larger, you realize that the quality of the onboarding is better than the quantity of the people that you onboarded. So yeah, I think that's an important a lesson, and it is a metric that's funny that people focus on, and it's one that is tied to ego directly. I employ this amount of people, so that means I'm X amount successful. Yeah, it's an interesting one, and not one that I haven't really realized, but I think I have that issue as well still to this date of what's our employee count at, and that's what a lot of the questions I get is how many members on your team and so on. So. Okay, so 2011 to great success leading up to early 2018, some issues caught up with you. And then it sounds like mid 2019 is when you would have started to figure these out, late 2019. During that time, loss of revenue, can you give a percentage of kind of the dip that occurred there or any layoffs that occurred there?
Yeah, I mean, I think it was probably more like 20 to 30% pretty quickly. And, the numbers in a service-based business in terms of team members and how you deal with that ultimately impacts the team itself too. And it's probably within that range, but we rectified things, I think, pretty quickly. It took about 6 months, but then by the end of 2018, we had turned the ship around, and that was the tipping point. Was we can get through December just based on the seasonality of the business, et cetera, based on our targets that we had laid out, we would be good, and we did that. So 2019 started out very, very well, and we were able to do everything that we could, including continuously not paying the owners anything for almost a year. And, all of the struggles that you do when it's your business, it's either your cash, your time, or your time and your cash. It's usually those in those orders. But 2019, it was sort of that rebirth of the Arcane 2.0 at that time. And we took all of the learnings and the team who was just reinvigorated with a different look and feel. And the leadership really had at that point in time enough energy and months behind them to really start to do things their way. And through 2019 and 20, we had, hadn't seen as much profit as we did. So 2019 became, really our greatest success year through 2020. And We'll get into that, but that year itself was a huge turnaround. And when you think of it, really, it was the half a year leading up to it, but the low point became unbelievably, the hockey stick up and to the right for us when we really started to look at the business from a profit center perspective. So 2019 had turned out to be really good for us and much easier than 2018, which was again a culmination of craziness. So
yeah, and 20-30% dip seems like a reorg is kind of what brought you back out of that, to summarize. And 2019 started to trail up, and then knowing the end of this story a little bit at least. Tell us about what 2020 brought going into COVID, and then the sale of Arcane.
Yeah, I mean, so in 2019, towards the end, it would, we had a technically a 5-year business plan. We started this business in 2011. So we as founders, as we do every year, we go up to our partner's cottage and we take some time together and we figure out, okay, what's the plan? And after all of that, energy and the other things, investments and opportunities that we had going on, leadership, we weren't as involved in the day-to-day. I was involved, and Brian more than anybody. But even then we had different roles and responsibilities. And so we took a look back and said, okay, what are we going to do with this business? And we didn't have all the answers, but we knew we needed to figure out, again, what the next 10 years of Arcane looked like. So we wrote down our criteria as owners, thought about it for a couple months, and then decided that we would, talk to a mutual friend who owned a small, M&A organization, and said, here's where we're at. We don't know what we're looking for. Here's some of our criteria. Is that the right time now? Is it 5 years? Is it 10 years? Maybe we never do it. The business is doing well. Our leadership's doing well. We don't, we're not obligated from a day to day. And so we just had a great conversation around what ifs, no contracts, no nothing. And it was the hour after that, I got a random LinkedIn message from a guy named Thomas with this crazy idea. I had a conversation, briefly with him, and, sort of the rest is history in some respect, but he brought to us this concept of bringing agencies together, ultimately acquiring, Arcane was the concept, but in a way that we would live up to the things that our list meant, which would, and I won't go through the whole thing, but keeping our people intact, our brand intact, the importance of our leadership to ensure that they would not be, moved over. Because a lot of the times acquisitions, it's people come in and everybody goes out, and, it was still our baby, and we didn't want to lose it. And we wanted to be, involved. We wanted to continue to be owners in some way. So he ultimately, with his vision, brought a checklist and an idea of us that gave us all the things and more that we were looking for. And so we worked through the rest of the end of 2019 in March and January, February, in March, to try to figure out how the deal would close. COVID had just sort of, started at that point in time. And we didn't really know what we know now, of course. And it didn't derail the deal. It didn't derail our intent and interest.
There's no hiccups because of COVID at all? Or
I mean, there was one small thing, which was we were signing our definitive agreement on the day that I think they basically shut the world down, March
15th or something. Yeah.
So we signed it, but we stayed in a boardroom and had sort of this contingency plan for, what ifs. And it was called the coronavirus plan or something like that. And, I can't get into the specifics, but ultimately it was really interesting because we sort of knew things were going to work out. We knew it was going to be right for the business. And because we had kind of been through these downturns before, is what we saw it as. We knew there would be economic impact. That usually is good in a space like this, where we knew digital and all things digital would probably come out strong from this, because workflows change and people will need all things digital. And we didn't, again, know what we know now, but together we felt pretty good about it. So we ended up closing the deal at the end of March, 1st of April. And it allowed us to continue to be involved in a passive way in all of the things that I had mentioned before, and still happy, and things are growing like crazy within that. But funny times when you can say it was during the height of COVID, you're able to close a deal like that, which on its own is another story in terms of going through the due diligence and the mental stress, not only before and during, but the 6 months and a year after selling a business is on its own an entire story for sure.
Yeah, and then you have Morpheo that's also growing on the side as well, and a younger startup too. So you can only imagine the combination of forces occurring there.
Yeah.
I usually ask kind of if there's any lessons you learned during the experience, and I want to start with that one. Any lessons you learned during the experience, but I also want to know um, about kind of the role of having that founding team involved, and that being kind of a motivational point where you can't kind of tap out because you have three others that are relying on you, and vice versa, right? So yeah, first, anything from kind of a lesson standpoint that you would want to pass on to someone that might be going through a similar experience, or that might go through that similar experience?
From the shitstorm part?
Yeah. Any lessons from there?
It's, to me, and I actually had this conversation with John today, it's when you're in it and when you're facing it, it's almost impossible to think that you can get through it, because it's at the time taking and consuming everything and all of your passion and energy. And at the same time, when you have a big company like that, you can't ever let anybody feel it. And so you have to put on this mask of positivity and positive emotion, and you have to keep clients happy, and you have to keep the team members going. And even though there's a sense and a feeling, it's really quite difficult to balance those two. But I bring that up because at the end of it, you always get through it. And no matter, and history is a great example of this, no matter what the world has been through from a historic perspective, there's always a way through it, and it always ends, but it's always worse before it gets better. And you don't know when that worse is,
Yeah.
So the lesson I learned is that there isn't anything I can't deal with. And I think as entrepreneurs, you learn there's this notion of, fear turns on reptilian brain thing, and you end up acting on behalf of fear, and you can't actually think straight. I think entrepreneurs have so much practice in busting through that fear to figure out a solution on the other side. And I have learned to deal with even the most, personal things with that same mentality of, I'll get through it. I need to think rationally. I need to really understand, what's going on right now. And to me, that's the biggest lesson I've ever learned, with that, being something I then had to go alone through because of what my wife was going through. Normally, it's the family support is always there too, but I didn't have that for a few months of it. Thankfully, I was able to, after all was well. But that layer of it really taught me to be able to deal with things even at that level. The partnership side, I think we uniquely have been very close friends for a very long time. We complement each other. We know not to step on any toes. We sort of know how to deal with it. We've never really had any big fights or anything like that. One thing we did early on was, I sort of took the realm of holding the vision and all those kinds of things, whether I wanted it or not. But at the end of it, that's what we agreed to. And we never had to go into our shareholders agreements. We never had to go into who has this voting or that voting, etc.
Yeah.
We really were able to be empathetic towards each other and the things that were going on, and do what each of us do well within our business lanes. And it worked out very well. And so I've had bad partnerships, and I can tell that story another time, but we've all been there. Some are great, some are bad, but this one is quite unique and quite special. We're still obviously very close to this day, and that we wouldn't have made it through if all of us weren't as close. That's for sure, because it definitely puts things to the test.
Yeah. One thing you touched on there is kind of being alone and feeling lonely. And a lot of entrepreneurs, if they're sole entrepreneurs or even with a co-founder, they might be more emotionally or actually monetarily invested into it, right? So they kind of feel alone at the top. With this great partnership you have, was there a feeling of still being alone, or did you always feel like you had three others that were going through it with you?
Yeah, I mean, there is definitely a layer of it. I mean, I'm again fortunate enough where I can say anything to these guys or in my family life, and I think I have that. I have a very, very special relationships that allow me for that flexibility. But I am a big believer in peer-to-peer groups and or advisors and or coaches or whatever. I like the peer-to-peer side because, it's a good example of having your own, board of directors for yourself, not just in the business, but you are as a human. And again, I have that relationship with them, but in some cases, it's good to have a sounding board of different views and different concepts and different backgrounds. So for any entrepreneurs out there that don't have it, look at those peer-to-peer groups. I'm still heavily involved in YPO. There are many others depending on criteria and needs and locations and all that. But I would say, no, I wasn't alone. I never felt like I was alone, and I've always had a great networking group. But to this day, I talk with agencies all over the place and friends and business, and it's usually just helping coach through emotional, personal things, because you're right. They probably don't have business partners and they have no one to go to. And that is probably the norm. I think I was very lucky and very lucky with the relationship that I have.
Yeah. Your founding team is usually the ones that can make it, that 3 to 4 people to even 2 people in there, usually make it further, because if one feels like giving up, they're dragged along with the rest of them. Right. So I think that's an important one. This is a really good story. To kind of give a recap, 0 to 15 million, started in 2011, built up to beginning of 2018. It looks like some of the founders were kind of trying to move on to work on some other stuff. Arcane was in a good place. Some things snowballed very quickly, including your brakes giving out and a few personal issues with your house. But on the Arcane side, which led to a 20 to 30% drop in revenue, but you guys jumped back in quick enough and were able to recover from that within a few months. And then get the business right back up to a good year in 2019, and then a sale of the business in early 2020. It's a really good story. It really is. And a near death kind of a down but not out story, definitely, with that 20 to 30% drop. That's similar to what Visitor Q saw. And like you said, it's only 20 to 30% because you stop the bleeding, right?
Right.
If you weren't in there, it could be a lot less. And Visitor Q saw that 20 to 30%, but could have been down to 0. And anything is better than 0. So getting back up to 70, 80% is always better, but that growth after always feels good as well, especially after you've put everything in those few months to bring it back. So let's wrap it up there, Eric. Thank you for sharing. And that's all for this episode. To everyone listening right now, please leave us a review, as they really do help drive awareness for the show. Also, subscribe to the show to be alerted of new episodes. And finally, like and share this episode on social media with your friends. Help us spread the word of Down But Not Out. Thank you, everybody. We'll see you on another episode.